Hey there, welcome back to my channel Accounts Accuracy, and let us study cash flow from operating activities. Here, the first step has already been explained in my third video of cash flow statement, and how to calculate operating profit before working capital changes that I have explained in my previous video, that is of cash flow statement in video 4. You must watch these two videos to understand it better. Simply, the net profit we get in the question, and in the net profit we add the reserve and we also add the provision, proposed and interim dividend. Then we do the adjustment of non-cash items, that also very well in detail I have explained in the fourth video. All the non-cash items, expenses we add and incomes we deduct, whereas non-operating incomes we deduct, and non-operating incomes which belong to financing and investing activities must be deducted. Accordingly, it is done. That's been explained in detail in my fourth video. Now, after doing the two steps, you will have the amount in which you need to do the adjustment of working capital, which I'm going to explain in this video. Now, in that amount, you have to add all the increase in current liability and decrease in current asset. And you have to deduct the decrease in current liability and increase in current asset. Remember, there is a direct relationship with the current liability. Whenever the current liability will increase, you will add. And whenever the current liability decrease, you will deduct. And vice versa you do for the current asset. When current asset will decrease, you will add, and when current asset will increase, you will deduct. Here it's been given, this is the format, it's given the way you have to do. The surplus you will write, and then you will do the adjustment of working capital, that is decrease in current asset you will add, and decrease in current liability you will deduct. Again, increase in current asset you will deduct, and increase in current liability you will add. So let us understand it better with this sum. Here you are provided with the surplus value of two different years. So the difference of the 2-year surplus value, what we need to do, we need to find out the difference. The difference between 60,000 and 55,000, that is 5,000. That in that value 5,000, we need to do the adjustment of working capital, that is decrease in current asset we will add. So let's find out what current assets are decreasing. You can see here current investment, this is a current asset. There is increase in current asset. So this increase must be deducted, because in previous year it is 8,000, but in current year it is 10,000. So from 10,000, when you will deduct 8,000, you will get 2,000. So the difference of increase of 2,000 needs to be deducted. So that needs to be deducted from the 5,000 value of surplus, because there is increase in current asset, and that should be deducted. Then we have trade receivables. Trade receivables is also increasing by 6,000. It is 31,000 in current year, but in previous year it is 25,000. You need to deduct 25,000 from 31,000. You will get the difference 6,000, which needs to be deducted. That is, increase in trade receivables needs to be deducted because there is increase in current asset. Then we have outstanding rent. Outstanding rent is a current liability, and the difference between 21,000 and 12,000 is 9,000. So this 9,000 difference is increase in current liability. It is increase in current liability, so it needs to be added, because as per the format we need to add the increase in current liability. So the difference of 9,000, that is increase in outstanding expenses, that is rent, needs to be added. Then we have Goodwill. Goodwill is a fictitious asset. We need to leave this, because this should not be included in operating activity. Then we have prepaid insurance. Prepaid insurance is a current asset, and current asset is decreasing over here by 2,000. Current year's amount is 2,000 and previous year amount is 4,000. So there is decrease in current asset by 2,000. This needs to be added, because as per the format, decrease in current asset needs to be added. Then what we will do, we will just simply add this 2,000 value to 5,000. Then we have trade payables. Trade payables is current liability, and we can see here again current liability is increasing, and increase in current liability needs to be added. So from 19,000, when you will deduct 13,000, you will get 6,000. So this 6,000 difference, so this increase in trade payable 6,000 will be added. So in 5,000 we are going to add this 2,000, 6,000 and 9,000, and we are going to deduct these two values 2,000 and 6,000. We will get the answer 14,000. So this is how you will calculate cash generated from operations. This is also a very easy step. So you need not to worry. Practice it well and you will definitely be able to understand it after doing few sums. Please don't forget to subscribe my channel and hit the big fat like button because it motivates me to make some more videos for you. Thanks for watching. Thanks for watching.